So in our first part tonight of our program, we're doing a showcase. This is a new part of our program that we're going to try to expand over time. The general idea here is that if you have a project or you're an opportunity zone investor looking for funding, or a fund who's looking to find projects, if you'll contact me in advance, we'll set you up so you can do a 5-minute short presentation on your project or on your fund or on your capital raise, so that this information can be shared with the attendees of this event. And then this event is recorded. It's posted up on YouTube under my channel, Karl Dakin channel, where it's visible to everybody. So you can potentially get many eyeballs on this particular presentation, and it may help you gain the attention of somebody that you need and want to talk to. So if you would like to, again, if you'd like to make a short 5-minute presentation at the beginning of the next program, which is in 2 weeks, contact me and we'll get you all set up to do that. For tonight, I am going to do a demo of what a presentation looks like for the Sugar Beet District. This is a project that I am now a partner on that is based out of Fort Collins, Colorado. The general concept is it's a 50-acre project, basically greenfield development. But the idea that this group is interested is doing a live, work, play, mixed use, commercial, industrial, residential type of a project where all the pieces are designed to fit together, not just in the initial setup, but over a period of time, so that all the tenants who are being invited, selected to be the commercial tenants in this project complement each other, both in terms of their markets, their networks, their shared vision. And the idea is to create a place where you really would like to live, work, and play, where everything is that you need or want is in this zone, and it creates a lifestyle that is everything that a development like this can be. So we have been trying to explain what this magic might look like. We've come up with the term human permaculture, borrowing from the agricultural field, which we're emphasizing with the indoor grow projects that are involved with this project, but extending it to all human nature. And so this is the project that you may be interested in. We're right now completing a private offering. We're currently staging a $9 million Opportunity Zone capital campaign. We'll be setting up a fund, which will be a dedicated single-purpose fund to raise money into this particular project. The $9 million will be enough to buy the property and do the engineering. Then we will line up financing to do about $40 million of infrastructure, horizontal development, and then each of the tenants will be responsible for raising their own funds and putting up their own buildings. And it's anticipated the total cost of that build out will be about $200 to $220 million for the project. And each of those may be their own Opportunity Zone investment opportunity. So we're moving through this now. I'm happy to announce that we were selected to be one of the social ventures that will be presented next week at the Colorado Impact Days. And so 60 companies who are helping the communities in which they reside across Colorado have been selected, and we'll be presenting on Monday evening on the first day of that conference, which is the entire Monday is dedicated to Opportunity Zones. So we're in the right place with the right story, and we'll be sharing this different way of going about real estate development. So that's the Sugar Beet District. If you have any interest in being involved in that project in any manner, as investor, service provider, tenant in the property, please contact me and I'll be happy to share with you additional information. So in this part of the Opportunity Zone meetups, we're going to talk about the theme of the night, which is competition amongst opportunity zones. So again, and kind of a refresher, opportunity zones are a federally tax-created incentive to take money that is a capital gain from sale of an asset and to roll it over into specific geographic areas which are distressed economically and which would benefit for more investment in that particular area. So the purpose and spirit of this legislation that was passed in 2017 was to move money from where it might go ordinarily, particularly then over to these areas where it might do greater good over time. It may help reverse a trend, may help do other things, and to help these particular communities. If you move money into an opportunity zone, there are 3 levels of tax incentives. First one is that you get to put off paying your taxes on your capital gains until you come out of the investment. So you may leave it there until 2046 at the outside would be the last day in which you are allowed to defer. Well, actually, no, under the rules, it's 2026, you're going to have to recognize the gain. So right now you have approximately 8 years where you can defer taxes. They may amend that. They're still talking about making it longer, but your investment can sit in that until 2046. The second thing is if you leave the money in for 5 years, that tax liability you have on what you rolled over is decreased by 10%. If you leave it another 2 years or 7 years total, it's decreased by another 5, so 15%. So $100,000 of tax liability today is deferred till down the road. It may become $90,000, may become $85,000 if you leave it in for the full 7 years. So this particular time frame is one of the clocks that's ticking for people who want to get their money to work and get the maximum gain, because at the end of this year, the 7-year potential disappears. You'll still have the 5-year milestone that you can attain, but there won't be enough time to get your money out before the 7-year number is over. The last one, which is the big winner in the thing, is if you make an investment and that investment goes up in value and you leave your investment for a full 10 years, that entire gain is tax-free. And this amount of money that you can save in taxes is so much larger than what might occur with the other incentives that it is the thing that most people are looking at. And almost every Opportunity Zone project is going to be talking about the 10-year term. And this is a good thing. And it's an interesting thing from a real estate standpoint, because a lot of real estate developers are build and flip or build and sell. And now they're having to figure out a build and hold business model where they are continuing to generate income over the 10-year time frame before they cash out of the project. And that's changing the look and style and feel of a lot of real estate projects that are out there. So in Colorado, there are 126 zones designated yellow there on the map, which are opportunity zones. So these are the ones that qualify for this tax incentive. Across the United States and the U.S. territory, there are 8,700 different opportunity zone areas, and in each area there's multiple projects. So we're predicting in the next year to 2 to 3 years, we may see hundreds of thousands of different opportunity zone projects come forward, which raises the whole question about competition. If you're going to raise money from investors, you're going to have to assume there's going to be more projects than there are money, and that you're going to have to compete for that particular money. And that's what we're going to talk about tonight. So each project technically will compete with another. Now, for those of us who work in the capital industry, we know that each project's unique, that it has their own features and functions and ROIs and other things that we might measure it by. But for the investor who's looking at all the projects at the same time, they often look very much alike. They're highly similar, sometimes difficult to tell one project from another without a guidebook. And so it's concerning to you if you're running a project that you have to look different, you have to be more attractive, you have to get the investors to choose you. So the perception of the investors is all different. All projects are different, so are all investors. Even though they're a classical commercial real estate developer or a classical high-tech business investor, they all have the different reasons why they invest, when they invest, how much they invest, how far in the business cycle or in the development cycle they want to be, and so they're all unique. So this whole thing constitutes a massive challenge to pairing a perfect pair between a project and an investor on a repeated basis. And just because you're in an opportunity zone doesn't mean you're going to get your money. There's no guarantee of that at all. And in fact, a lot of projects go unfunded because they're poorly prepared. They failed to go after a crowd or target a specific investor profile. And this is no different from raising money at any other time. At this point, setting the tax incentives aside, anyone who's running a project raising money, they're going to have to do all the best practices that are out there for raising money, regardless of whether you're a real estate project or a business. So, what distinguishes one project from another? Most people will say, well, it's how much money you can make. And last program, a couple weeks ago, we talked about what is an optimal opportunity zone investment. And in doing that, we got into the fact that if you're into real estate, you're ultimately going to hit some threshold or cap on the maximum amount of money that real estate can generate, because the improvements to the property are going to drive up the value. Putting tenants on the property will drive up the value. And even with a share of rents in like a shopping center or something, you're still going to approach a cap on the maximum money you can make. If you really want to make the most money from opportunity zones and incentives, you have to start investing in high-tech, fast-growth, long-term businesses who have this tremendous upside potential where you might be looking at 100 times or 1,000 times your investment potential, all of which could be receive the reward of tax-free treatment if it's all done correctly within an opportunity zone. But when people talk ROI, it sounds good when you say, hey, we're going to make you 10, 12, 18%, somewhere in there kind of ROI. But if the next 10 people in line tell you the same story, then you all look alike. I had an opportunity to present a medical device at the Bellagio in Vegas, and we were one of 40 invited companies to present. And every group got up, 3 guys in white jackets, because it was a medical device conference, and they put up the same chart. And by the time they got to the 5th chart, they just could have changed the name at the front and left the charts up for everybody, because everything looked alike. And it was getting very, very hard to differentiate yourself. You have the same problem here. ROI is a requirement. It's going to help tell you whether or not the investor matches up with what you're trying to do, because some people are going to be happy with 8% tax-free. Some may be lower. If we're dealing with a foundation through an impact investment, they might be happy with 2%. If you're looking for somebody who's looking for higher ROIs, they might be demanding 10, 15, 20% type of ROI or higher. So you have to know who you're talking to, because everybody will have their own preferences. But at the end of the day, ROI is not going to do all of it. Impact is becoming a growing term. Obviously, Stephanie Gripney is putting on the Colorado Impact Days next week down at the Curtis Hotel. And the Sugar Beet District project is going to be one of 60 ventures down there pitching for investment. So one of the things that Stephanie is doing is she's going to foundations and she's explaining to them that they can advance their mission better by making a program-related investment, a PRI, as opposed to making a charitable gift. And so a lot of this will be different groups who ordinarily would be looking for charitable contributions are going to change their story, they're going to monetize their business, and they're going to start looking for true investment in sustainable models. So impact can be anything. If you talk to all the communities about what's going on with opportunity zones at the community level, they're going to tell you, first and foremost, we need jobs. And after we got jobs, then we automatically need housing. And if we have housing, then we're going to need to do training of the people who are filling those jobs. And by that time, if we put in all the housing for the new jobs, we may have overstressed the existing infrastructure, so maybe we need to upgrade water or put in a Wi-Fi tower, or we have to do something with waste in that particular program. We go beyond that to health, other aspects of the community that may need assistance. And if you're trying to deal with that within your business model, if you are taking that into account and saying we're not just putting up new buildings, but we're creating these jobs, or we're training the people so they can hold the jobs and get a higher pay, these types of things will start separating you from the other projects by just a single element. And if you have multiple elements, as we're trying to do in the Sugar Beet District project, we actually tagged all 10 of the topics that they're trying to address at that conference within a single development, which we hope will make us stand out from some of the other people who were there. Visibility. I ordinarily talk about this when raising capital, that after all your hard work, if you're not talking to the right investor, the properly qualified investor that matches up with your project, you're just talking to yourself. And right now, with the chaos between the projects coming up and the investors coming up, and they're not coming out of the same circles, we're seeing this big gap between people with money and people with projects, and they're trying to figure out how to overcome this. So one of the things that's going on is the state of Colorado has actually on their website allows you as an investor or a project to post up your project in order to try to create a match. Now, I will tell Derek, if you haven't looked at it yet, there is a disclaimer at the bottom about you shouldn't be on here unless you follow the rules. So technically a private round still isn't going to get you there, but I expect you and them will have some conversations before we're done. But your ability to make yourself visible may be the differentiating factor. It isn't that your project's better, but they saw you and they didn't see the other projects. There isn't a comparison taking place. So your ability to get the word out correctly in the right place about your particular project may make all the difference in the world if you're successful in attracting the money you're looking for.